The smallest market cap company in my entire portfolio is up over 20% today, and that is the Hnst company. The stock is now past the $4 mark after reporting earnings after the bell yesterday. I made a video on this stock when it was back in the $2 range, and I said it was a $2 stock with massive upside potential. Now we're up into the $4 range. That upside potential is really starting to take hold, and we're seeing it play out in front of our eyes. We're going to talk about exactly why this stock is popping so much after earnings, but first, real quick, if you're not subscribed already, become one of those 4,500 or so people. It means a lot, helps out the channel in a massive way, and if you can drop a like on the video too, that also helps. Thank you so much for doing that, and let's jump into the video. So they reported earnings last night, and they had a record revenue for the quarter of $93 million, and that's up 10% on a year-over-year basis. They also raised their full year 2024 revenue guidance and EBITDA guidance, but those two things are not really what's moving the stock in a massive way. The thing that's really moving the stock is that they've had the most ridiculous gross margin expansion in such a short period of time that I think I've ever seen in any consumer packaged goods company. They improved gross margin profitability by 1,120 basis points. So that's 11.2% increase on a year-over-year basis in gross margin. And this is not just a one-quarter thing. Last quarter, they also had a year-over-year gross margin increase of over 10%. So they are absolutely committed to blowing those gross margins up to crazy numbers. 38% up from 27% is extremely impressive in a 4-quarter span. Like I said, I have never seen a gross margin expansion that large, that fast from a CPG company. Not only is that revenue increasing respectably at 10%, but also as a percentage of revenue, the operating expenses are coming down. They did increase operating expenses by $3 million, but it is a decrease of 0.3% as a percentage of revenue. This is a company that's still taking net losses on the bottom line. They had one quarter where they actually posted a net profit, Q4 of 2023, which seems to be a seasonally strong quarter for them. And then the last 2 quarters, they reported net losses, but they're getting much closer to flipping that profitability corner. When gross margin is up over 11% on a year-over-year basis, assuming they can keep the operating expenses flat or even down as a percentage of revenue, the next thing to follow is net margin. Speaking of profitability, adjusted EBITDA had a $12 million swing within the past 4 quarters, from a negative $4 million in the year-ago quarter to a positive $8 million in the Q2 that they just reported yesterday. On the adjusted EBITDA front, 2024 full year guidance, they raised adjusted EBITDA guidance from low to mid single digit range all the way up to $15 to $18 million range on adjusted EBITDA for full year 2024. That's a crazy guidance raise, and although adjusted EBITDA is not nearly as important as net income, it's a sign that we're getting closer and closer to flipping that profitability corner on the net income side. And while we're talking about guidance, let's talk about revenue guidance. They upped their revenue guidance to mid to high single digit range, up from low to mid single digit range. So that's really good to see. Not only are they saying we're going to bring in more revenue, but also we're going to be able to retain more of that revenue because their gross margin is absolutely exploding, like we talked about, over 11% in a 1-year span. And then the last thing I want to talk about is the balance sheet. This company went from a potential bankruptcy candidate about a year ago to now having $37 million of cash equivalents, and short-term investments sitting on the balance sheet with no debt. Once again, a very impressive turnaround from the management team to go from edging on bankruptcy to now $37 million in the positive, giving themselves a very nice cushion. And with net losses for the last 2 quarters of $1 to $4 million, they're in a really good spot. They're not in a scary cash burn situation where they're going to have to raise cash, dilute shareholder equity in order to stay afloat. They are good. They're chilling at $37 million, and they're probably flipping that profitability corner sooner than we think. And one last thing, just to really show how great this management team has been at running the business, check out the string of beats they've been able to put together over the last 4 quarters. Q3 2023, 40% EPS beat, about a 5% revenue beat. Q4 of 2023, 123% EPS beat and about a 7% revenue beat. Q1 of 2024, 88% EPS beat, about a 3.5% revenue beat. And then the quarter they just reported, 60% EPS beat and nearly a 7% revenue beat. That's very impressive. If they can string together more and more beats, that's what the market likes to see. They don't want to see a company that's coming in and meeting expectations, or way worse, coming in below expectations. We want to see them beating on a consistent basis. If they can make that their identity as a company, then it's going to be much easier for Wall Street to get behind them and flood money into the stock. For anyone who saw my video about a year ago and saw the stock at roughly $2, or anyone who was buying in the $1.50 range, you're sitting pretty on those shares. Congratulations on your gains so far. I think we have a lot more gains from here. I could easily see Honest Company touching $5 within the next few months, unless we have some kind of big, broad market sell-off. Let me know if you own the stock in the comments below. I want to hear about it. One of my favorite parts of posting here on YouTube is having some conversation with you guys in the comments down there. I appreciate you being here in a major way. Thanks so much. Have an amazing day.